morning, everybody. Welcome back to another live stream here. Happy Monday. It is Monday, October the 3rd. Welcome into October. Hope you guys had a good September. Lots going on today, but mostly the most important pressing thing is that the S&P 500 is rallying in the pre-market. Now, this is no surprise. We already covered this on last Friday's live stream. I mentioned due to a couple of different reasons. And if you haven't caught that live stream, make sure you go catch it. Here's a little excerpt from it that adds to my conviction that we probably won't be able to break this low, or if we do, it's going to be a major fake out to the downside for bears. Okay, so all of these things put together are what is giving me the confidence to say that, okay, there is a very high chance that we get a tactical bounce. We have sectors that are really washed out right now. And tactical bounce is exactly what we are seeing here. So a lot of the sectors that you saw last week that were pretty much showing relative weakness are now showing relative strength. That's exactly what we like to see. So a quick little clap on the back for yourselves if you follow through with the conviction. Just a show of hands. How many of you are attending this live stream after Friday's live stream? And if you're here right now, definitely take a second of your day to smash the like button and leave a subscribe if you haven't yet, so that we can get this stream reaching more people. So if you were attending last Friday's stream and then you're here today, I would love it if you put in the comments it helped you, or you took a piece of the action. Now, we specifically spoke about two sectors: energy, which is up from last week, Friday, right? I spoke about energy being one of the sectors, and then what was the other sector? It was bonds. It was bonds, right? And bonds, TLT specifically, is also up about a couple of percent, right? I think it's up about $2 here. Now, we took a TLT bounce play, and I've yet to start an energy play because we still haven't made higher highs yet. So that's something that I will get started once I see that play come into fruition. But I already have started a bounce play on TLT for the short term. Remember that this bounce that I'm talking about on S&P 500 is a short-term bounce. I'm not talking about a huge rally into all-time high, right? But obviously that could happen. I'm not trying to call out a bottom here. What I'm trying to do is tell you that there was likely to be a bounce, and that's exactly what happened since Friday, which is the live stream that we held. So therefore, I'm glad that some of you caught the Friday's live stream, and therefore you would be pretty much at the same position as us. So now, as I mentioned, this is the fair value estimate range for S&P 500, 3,600 to 3,750. And remember that we are still bearish here until and unless we negate or really start to break above 3,700. 3,700, we need to hold above it, and if we really hold above 3,700, then yes, sure, we could have that, bounce and rally up into maybe even the 4,000 level. 3,950 is more likely, but 4,000 is also possible with some exuberance. If we get a short squeeze, it would be even more violent. So that's what you need to know about this right now. Now, until and unless we don't break above 3,700, this trade is not going to continue to the upside. Okay? A rejection anywhere here at the market open is going to send us further down into the 35 to 32 level over here, right? And if you look back all the way to the COVID period, the next support, if we do lose this, is going to be only at there will be a mini support at around 3,500, but if we melt through that, then we're probably going down all the way to 3,385. So if we don't bounce here temporarily and we don't get above 3,700, then we're heading down to 33 to 3,400. Excuse me. So that's the play right now. Okay, so let me recap for you guys. Yes, this bounce was expected. Why? Because on Friday I already mentioned that there were a couple of forces at play. Number one, the dollar index peaking out and showing a retracement. TLT, or the bond market yields, showing a cool down and showing a little bit of a reversal, right? Then I also spoke about the AAII sentiment survey, which is the American Association for Individual Investors, and I was pointing out that there is 61% or 60% roughly of traders who are bearish, which means that the sentiment or the conviction for a bearish trade or the chance of a bearish trade actually going through is very, very low, because market makers would have to force the action in the opposite direction to create liquidity, right? And then lastly, I also mentioned that the CBOE, right, the total put to call ratio is at 1.12 and the index put to call ratio is at 1.35. These are March 2020 COVID levels, right? So I mentioned all of these things on Friday, and I said these are likely the reasons why we are to see a bounce, a tactical bounce, and that's exactly what's happening here pre-market on Monday, right? Now, these things tend to play out in a weird way. So I'm not saying that we can't go further down. All I'm saying is that this is a temporary bounce in the market, and we need to get above 3,700 or 3,720 to really, really solidify some kind of a material bounce. That means to say a retest of 38 or 30 or 39, and then go up to 4,000, and then from there we'll have to see what the sentiment is like, right? Not only that, we have to also look at what are the amount of trades that are being put on by CTA traders, by retail traders, by a whole bunch of institutions. Then we'll be updating you along the way on Wednesday or Friday when we have more information, right? I also have put together a newsletter kind of reiterating everything that I just spoke to you about. So you'll be receiving that in your email this morning shortly. I've already scheduled it. So if we reject anywhere from now all the way to 37.20, let's say, right, that's going to send us back down into the 34 or 33 levels. Okay, 3,334 levels on SPX. And on SPY, that's equivalent to, I believe, let's see here, let's just call it 335 to 345. 335 to 345, roughly, on SPY. And that would make sense because we saw a lot of puts being rolled down to 342 strikes last week. But then again, as I mentioned, a squeeze wasn't coming. And that is an important part of this market play because liquidity needs to be created. Okay, now on to some other opportunities. So I spoke about energy being a key play here. And it should continue to be a key play here as we get more OPEC news, especially if OPEC decides to cut production. Then we're definitely going to see energy stocks rally once again. And I don't know if they already did. I don't know if they had the OPEC meeting yet. But let me see. I don't think they did. Did they? And then Tesla had missed delivery units by a little bit. But overall, it was a good report. It wasn't a bad report. So OPEC Plus will hold press conference meeting after meeting on October 5. So 2 days from now. Okay. So that's one sector that I'm watching, energy, for some speculation plays. Then there is, so XOP will be a proxy for that one. Looking for a bounce play here, probably into 142 if possible. XOM also, if it can, kind of bounce here and start to head to the upside. I would be happy to take a trade on XOM if we can get that. Really nice trend line here. I haven't really drawn it yet, but I will chart this later. Apple, free falling and likely to support the market in downside movements, but unlikely to find any demand until 133. Okay, Apple's likely to continue sliding here until 133, where it will find demand. That's where the level is. Of course, it could also bounce here temporarily and then come back down again. Remember, market cap wise, Apple is the biggest market cap. Nvidia has finally come down to the 122 level that we spoke about back about a month ago. Now, this is the real spot here for where semiconductors are going to be judged. It's like judgment day for semiconductors. If we bounce here, you can see that the whole market's falling pretty aggressively, but semis, they have stopped falling so aggressively, which kind of shows that the breath is starting to get washed out here. There's not many sellers left on semis. That's what I'm starting to see. In fact, it looks like we are going to head into area of accumulation here, and then possibly a markup phase after, like maybe a month or so, maybe in two weeks later. Okay. Microsoft also hitting a dual zone here, but it looks like it has a little more downside to around 226, 227, where this trend line is. It's likely to come down here and then bounce. Where's the dual zone from October and July to December last year? This dual zone right here. This is now going to become the support after it was resistance prior. Google, after free falling, this looks like it still has a little bit room to go down into $90, so from a $5 downside, but I don't like playing the downside there. Similar story with with AMD here. Not much downside, don't want to play that. Amazon does have downside, but whether it does go for it, it's a different thing. This looks like a very deep and strong demand zone for Amazon. So be careful playing this downside on Amazon because you can get clapped. There were some bullish sweeps on Marvel last week. $45 calls were being bought out of nowhere. I would possibly, look into that. So semiconductors might get a bounce, which is what I'm possibly looking at. I do like playing a semiconductor bounce trade since SMH is really, really oversold. So the semiconductor ETF, SMH, right? Super oversold, hitting into a demand zone right here, right? Looks like a good spot to pick up a long trade for a bounce. But obviously, I don't want to do it till I get the confirmation. So I'm kind of waiting for that. Waiting for that to happen. On Friday, it finished with a very bearish pin bar. But we'll see what happens today. It obviously depends on what happens after the candle, after the pin bar, not the pin bar candle, right? So next up is Tesla. Tesla broke below its channel. We'll need it to come back and retest 265 or 264 before we make any rash decisions here. In terms of the fib extension from the previous wave, the targets are going to be 254 and then 244. We already hit 254 pre-market. That's where the fib 38.2 bounce extension is. Next is the 61.8 extension, and that's pretty much at 244. So about a $10 downside if Tesla really gets there. We'll see. And the market just opened. So yeah, that's all I have for you guys. I will keep this stream short and simple, and so I'm going to get onto trading with the team on Discord right now. Small update on the small account. We're currently up about $865 on the year. About 18% based on the starting balance. The starting balance was about 4.8K. So these were all trades that we've taken. And the main account is currently at around, I believe, 533,000 with this one. I don't have any. I need to clear this up. This is from last week. So we'll be starting afresh this week. And I'll be logging everything as usual. If you're looking to join the Discord, link is in the description below. And the rest of you, I'll see you on the trading floor right now. Peace and take care, guys. See you on Wednesday. Hope the stream is helpful. If it is, give it a like. I truly appreciate it. Share it with your friends. And have a nice day. Bye-bye.